All righty, traders. This is Blake Morrow, and you are listening to The Morning Edge. Oh, hey, John. Boy, you always have something to say to me on my videos, right? Huh. Hey, this is actually kind of a pretty cool morning. When I say cool, I actually get to open my windows for the first time in a few months. It's been great. It has been nice. Anyway, all right. So first things first, if you guys are in the chat rooms, you know, I actually sold some dollar Mexican peso this morning, and I sold some dollar Canadian this morning, and dollar rand as we completed the inverted head and shoulder pattern, or very close to. So Bran says, love me some morning edge. Hey, Blake. Hey, Bran. Good to see you. Nice having you in the chat rooms now. Pleasure. Let's get into yeah, just here, guys, so you can see some of the trades that we are doing here in the chat rooms. So nice trade, Benedict, by the way. All right, let's get to it. Let's get to it this morning. Oh, so I think we're going to have a little bit of a bounce and risk. We're obviously, that's the whole reason why I picked up a little bit of some of these currencies, but I want to tell you this. I'm gonna leave it with you guys like this. I am going to sell into strength. So if we get a bounce in the S&P, what I'm going to do over the next couple of days, crap, let me adjust this, is I'm going to sell into strength here. So okay, if we get a bounce, I'm going to sell into strength. This is like I told you on the FA.C.E webinar, we're in the bounce zone, if you will, support zone in the market. So, you know, let's talk about, I guess, where that support is. 43.50 is support. Any move back up to 44, that should be 44.40. I mean, I know 30s was the 618. You got to let it go past that. I mean, I would say actually anywhere between 44.40 and 44.80, because you're talking about the underside of this trend line. So the big wedge. So I'm going to write down a couple levels. 43.50. By the way, we are flipping from bullish to bearish. Okay. So remember, we've been bullish for a long time in the S&P. Actually, I can't, recall when over the last several months we've gone bearish. It's been very dicey going from bullish to neutral, but we've finally gotten a close below the wedge. So now that we're below the wedge, I am going to be selling on rallies. So now any rally back up to 44.30 to I would assume 44.50. So I'm going to go to 44.30, 44.50. And as long as we stay below the underside of this broken trend line, I want to be bearish. Now, I just told you guys, I went short, dollar rand, dollar Canadian, things like that. Why? Because I'm just expecting a bounce. This is just a tactical trade. I want to be long dollars against a lot of things. I just got out of my dollar Canadian longs over the weekend, got out of my dollar Mexican peso longs over the weekend, and it was a nice trade, So hopefully you guys are along for the ride. Oversold for the S&P too, so just keep that in mind. All right, let's go into currencies. The 88% retracement of the euro should just have come into play. That's really close. So that's going to be right here at 116.90. And then remember, we had this false breakdown here. So this is all really key support. Actually, you know what we should do is we should just write 117. I mean, it's all really good support here. I mean, I wouldn't want to be short the euro right now. I like the euro on crosses, you know, I'm long some euro sterling, but I mean, I don't know if I'd want to be short the euro right here. I'm not trading the euro, by the way, like the euro dollar, if you will. I'm not trading it. $118 would be resistance on any rally, which is going to be that channel resistance and spike high right here. So, I mean, I know it's 117.90, but we can write 118. Okay. It's range bound. Sterling. So the 161% extension of this low to high comes in at 136. I've got to imagine that's got to be pretty key support. Whoops, didn't mean to do that. And resistance today is going to be at 137.30. That's pretty key support right there. Aussie. So the Aussie is the Aussie is going to be in this channel. And as you guys know, if you watch the week ahead video, following the Fed, if the Fed is dovish, I am playing the Aussie on the long side. John G, who listens to this webinar every day and listens to every webinar we do, had something to say on my video. So the Aussie dollar, you only want to be long following the Fed if the Fed is dovish. But we have to respect the fact that we have this channel right here. We have this resistance at 73 cents. Support is going to be, let's call it 72. Whatever, John. Kiwi. Support at the 50% retracement, resistance. So this, remember, we were looking at this possible flag because it was so shallow, but because we got some dollar strength, that is not valid. So let's look at support being the 50% retracement here, resistance. And remember, the Kiwi is still outperforming. It really doesn't look that bad. Risk appetite is bouncing, by the way. Hold on really quick. Kiwi support is going to be, yeah, the 50% retracement, resistance is going to be right here at 70.85. 69.80. There you go. And remember, we're keeping everything range bound right here for now. Dollar Canadian. So that was a really nice gain over the weekend for those of you that were long from Friday. You have to be really careful with this, that we're up against the 161% extension, 78% retracement. You know, some of us in the chat room have been shorting it. So just be really careful that we're up against really key resistance. Remember, this is the 129.50, 129.60 right there. Okay. So, you know, as we approach up there, you got to be really, really careful. $127.60 is going to be support. We're going to give that 88% retrace on 129 key resistance this morning. Swissy. So we hit the 161% extension. $93.30. We hit 93. Oh, wait, we hit 93.34. So we were off a few pips. So we hit that, reversed. We should find support now. Somewhere around here. Somewhere in this level or in this. Yields are coming down. So we have to just take that into account. Okay. So 92, let's just call it 92.40 and 93.30. Oops, I'm sorry, that's 92.40. $93.30. That's going to be key because that's 161% extension. This one has turned into bullish because we broke that downtrend line. You know what? I can't recall. Yeah, we did flip it to bullish. Just keep in mind that this is going to be really key now. Okay. And actually, this trend line here, this blue trend line, that's probably realistically even bigger. That's going to come in at 93.50 roughly. Hold on really quick. Okay. I just closed my dollar Canadian short. I had a kind of a crappy, entry on it. So I just closed it. Where are we at? Oh, dollar yen. Let's see, moving right along. So I'm worried. I'm a little worried about the US dollar Norwegian krone. I've been talking about that in the just a general chat because we broke back above that 873 level, which I thought was big, but we couldn't hold above it, and that concerns me a little bit. It concerns me the fact that we can't hold it, and I still want to be long the US dollar Norwegian krona. I like it being long while we're above the 200-day moving average. If you guys remember last week, I've been buying it down here. You know, smaller size. I haven't been too aggressive, but I think the risk is a false breakdown. But I want to see how this market shakes out this week, because I think, you know, following the Fed, if the Fed is a little bit more hawkish, the dollar Norwegian krona is going to squeeze higher back up towards 9. So I want to be long this. I don't necessarily, I'm a little worried about the price action this morning. So anyway, dips will probably be bought down 865. Resistance is going to be right here. Those highs, I'm going to call it about 880. We're going to be really close to flipping this one bullish this week. Dollar max. So this, as you guys got the update this morning, let's just go back over here just so you guys can see it and why it's important that you read these live stream updates, right? Dollar max is at a 50% retracement, previous highs from the spike high in August, blah, 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 double top neckline, right? That's rejecting us right here, guys. You got to be really careful. I would say the spike high is probably key. Hold on really fast, guys. Sorry. I'm trying to trade this morning and do this webinar is going to be a little bit more difficult than normal. Okay. Hold on, guys. No. I just closed a dollar max short. Okay. All right. Anyway, I was long over the weekend, sold it up here, just closed it. I don't want to be short. I don't want to be long risk. It's just I thought I was ready for a bounce this morning. And to be honest, it probably will end up bouncing for the next couple of days. Doesn't mean I need to stick around for a couple of days. It's just I think that's the risk. Okay, sorry, getting back to this. I'm going to finish this up so you guys can listen to Steve and Stelios, and those guys can finish up. So sorry, guys, to keep you all waiting. It's a little busy this morning. Dollar yen. I still don't know what to do with this damn thing. So
that's great, isn't it?
It is. It's nice to see volatility for sure. For sure. Okay, so resistance here at 110, support at 109.10. That's all you need to know about that thing. What did I say resistance was? 110, range bound, dollar index. 78% retracement. This is the previous high up here, right there. It's going to be resistance. I mean, I think this breakout point is going to be support. So 93.13. My opinion is we're going to be consolidating here before the Fed on Wednesday. So this move that you're seeing this morning is just kind of an outsized move, little overshoot, if you will, and then we're just going to consolidate. So 93.45. I'll give it up to the 88% retracement, which is 93.53, but I'll say 93.50. And support's going to be back here at 90. I know the spike high is right here at 93.20, but you got to give it a little bit lower than that because you can see all these spike lows here, or spike highs, sorry, right through here. So that's going to be around 93.10. That's right around support. Like I said, I don't think we're going very far. I think we're just gonna, it's squeezed out some, shorts, if you will. And, before the dollar can break out, we have to have evidence that the Fed's really going to be, stepping in front of the taper train. And, if we are, then the dollar is probably going a lot higher. But I think the market's going to need proof of that. Okay. Finishing up dollar mex. So 2022, that's what we were going to write, right? 2022. And then because that's the 618, if I'm not mistaken, because we were just looking at it. Yep. And then so support is going to be back at 20. I mean, if the dollar Mexican peso gets back to 20, I'm a buyer again. Just so you guys know, right around 20, I'm going to be a buyer somewhere around there. I think we're in a range. Gold and silver. Stelios is love pet rocks. Just kidding, Steve. Stelios.
You're off my Christmas list. Even if it's canceled, you're off the Christmas list.
All right. Resistance is 1780.
You deserve that.
Here's the thing is, I don't know what's going to happen with precious metals in a risk-off environment. I mean, I would think that they strengthen, but I don't know, I'm going to assume that they are, but
initially they don't, I think.
But when's the last time we saw some sort of risk-off environment anyway?
COVID, I mean, they suffered. The silver went down to $12.50, if you remember. So
and that proved to be an amazing buying opportunity.
Yes. I think initially they suffer and then we go.
All right, well, we'll see. I think the 618 right here should be support, at least intraday. So 1780 resistance, support, let's call it 1735. 1735, 17. I know I'm bearish while we're below 1780. I know that, and I'm gonna have to stick to that now. I think that, I still think we're gonna test these lows. I know Dale said that, hey, may we have an inverted head and shoulder pattern. Obviously if we get back above 1780, I'll start getting in that camp, but I don't know. I don't know about all that. I still think that these spike lows are going to be tested. We'll see. Silver. And we're in a bear flag and a bear flag, right? Let's just move that, right? Just move that out of the way. You could say we're in a bear flag and a bear flag. So I still think we're going lower. Remember Friday's analysis. If we can finish this flag below this spike low, and if you want to be a buyer, that's probably a great place to do it, right? Because you got all these spikes over here. So you can see how we obviously hold these levels. So let it just break through that support and then be a buyer right around that 21.75. I think that's where we're going, but hell, if we get down there, I might actually buy it. I'm going to actually send an alarm down there just so I can watch it. Because let me move that up just a bit. Because if we get down there, I would be interested, depending on, you know, obviously I'd be looking at cryptos and everything else and seeing what else is happening, but that's possible. Any move back up to 23 is probably going to find sellers now. Now, Bitcoin and Ethereum, I bought Ethereum this morning, guys. I know it's kind of crazy, but seriously? I bought it. Huh?
Seriously?
I did. Yeah. I think this 3,000 level is huge. I bought it before I bought it at a crappy price.
Oh,
I bought it at 30.
It did touch 2,900. Huh? Yeah, it did touch. I just realized that it did touch 2,900. 2,900 is indeed a good support area.
Yeah, it's 3,000 actually, I think.
Perhaps I'm watching on a different exchange, and they have some differences.
Well, so you can see I bought it right here at 30.60. And I bought it, and I'm like, okay, I gave you guys my analysis on the F.A.C.E webinar. I said this is just all really big support down here, and you can't say that, oh, it breaks 3,000, that's it. I mean, look, we went to 29.24 and we're already at 30.60, right? So this is all a zone. I expect actually like Ethereum to get back to like 3,400 around these levels. I think Bitcoin, pushed through really key support here at 43.5. And, we had this conversation on the F.A.C.E webinar. This is all a support zone. So once we're here, you need to be, just kind of looking around and saying, all right, well, let's see if we get a sustained break. Like if Bitcoin closes below 42,000 today and we stay down here for like hours, because remember this 42.5 was a big resistance on the way up. Remember? I mean, we get, I'm going to write down 42.5 anyway. So I know we were writing down 43, I think, but let's go 42.5 seems to be important today. If we get a sustained break below there, I would be thinking that Bitcoin's probably trading back, much lower, but this is all really key support. And now resistance, obviously back up at 49,000 is key. That's it. Okay. We are flirting with turning this into bearish. And by the way, this is bearish. Now look at what happened here. Let's go over to shoot. I want to make it work. Stelios, did you already grab that?
Yeah, I got it.
You got it. Okay, good.
I haven't uploaded it yet, but I'm going to do it now.
Yeah, no problem. I just wanted to notice the changes here. US dollar, Norwegian krona, we're going to flip back to range since we got back above 973 or 873. I know it's heading lower right now, but that flirt with, above 873, I think it's got to help, or it's got to remove the bearish designation off of there. And notice that we've gone from bearish or bullish in the S&P to bearish. And while we're below that trend line, I think we have to remain bearish. I think right now stocks are bouncing. Let them. This is what we want. We want risk to bounce. And I think it's going to be probably fairly well bid between now and the FOMC. But I think structurally the market has changed. And I like it for volatility reasons. I hope you guys do too. All right. Stelios, Steve, I'm going to let you guys take over. And
thank you very much.
Thank you, mate.
Thanks, guys. All right. See you later. Bye.
Bye-bye, mate.
So we're getting some two-way action. Woohoo!
Oh yeah.
Yeah. It's been it's been long overdue to get a risk of move, but let's not get ahead of ourselves. This still is not, technically in the short term, we've broken the wedge in the S&P, yes, but yields are still low, and we've got the FOMC coming up. We've got the China situation. It's not, the market is getting a little bit jittery, but I don't see a clear change in dynamics yet. But it is it's a good start for sure.
Technically speaking, we've broken through the wedge. We had said this is the first important milestone.
Yes.
In any corrective move lower. We did it on Friday. We did it with some proper determination, since not only we managed to close below it, but we actually closed at the lows of the day, which shows in general that the market participants didn't actually find by the end of the day buyers, which we frequently see happening.
Yes.
And I'm not surprised that we're seeing immediately a follow through today. And we said on Friday's webinar, before we had actually really conclusively broken down, that the next downside target is going to be this 43.52, which is the previous low. Now, this is a second milestone having to do with a corrective move lower. Why is that? Because breaking through this, which I think we were going to do, I'm not surprised that we're rebounding from it. I think it's pretty normal. There's going to be some buying here to start the session. But I think there is a very big chance that this rebound is going to fail. And then we're going to break through 43.52. And by breaking through 43.52, we're going to tick the next box, which is producing a lower low, which we haven't done in a long time. And then that immediately opens the next downside target, which is this horizontal support resistance area at 40.250. I'm pretty convinced that we're going to be seeing that level sooner rather than later. So basically, even if you see the 4-hour chart, this is how it looked like. Nice move lower. We talked about the 4-hour chart as well I don't remember if it was both Thursday and Friday or if it was just Thursday. I talked about this possibly being a rectangle or a triangle. In both cases, I expected that it's very likely to see more downside as long as we trade below 44.90. And this is what has happened. So, yeah, nice outcome, because we know that this development in stocks is going to spill over to the rest of the markets, the rest of the asset classes. We've seen dollar strengthening, which is a very natural reaction to risk off. We've seen cryptocurrencies getting, smoked, which is very, very normal, because we've explained, I've said that years ago, no matter what they tell you, there is no riskier asset than cryptocurrencies. So whenever there is some real risk off, you should expect to see them sell off hard. And that's why I'm very, very, I agree with Blake that 42,500 is a key support area in Bitcoin. 2,900 is a key support area in Ethereum. But I'm kind of skeptical that we've found a low here. I think it's very likely, if we see this risk of continuing for the rest of the week, I think it's very likely that cryptocurrencies are going to be slicing through those supports rather easily, and that is definitely going to be a very bearish development. Now, on the other hand, I also agree that precious metals do remain heavy, and we also do know that precious metals tend to sell off when we have risk off, unless the reasons for risk off have to do with the status, with the health of the financial system itself. Because when the risk off move is coming through due to jitters that have to do with the health of the financial system as a whole, then precious metals tend to do extremely well in a risk-off environment. But so far, at least having to do with developed market economies, the risk-off mood has not affected yet the perception of how structurally sound the financial system is. It should have, because for those of you that understand what's happening with China, what is happening in the case of China is that with China being in essence a dictatorship, because of course there is no communism in China, right? There is communism only in the part that has to do with dictatorship, because of course you can't have a communist regime without having dictatorship, because nobody wants to be a communist, actually. I mean, nobody wants to live in a communist environment, actually, because in order for that to function, you need to lose the vast majority of your personal liberties and freedoms. What China is, in essence, is doing is it's popping some of its internal bubbles in a controlled manner, like how you see buildings being taken down by using explosives.
Controlled demolition, yes.
Controlled demolition, yes. So what China is doing is using the method of controlled demolition to break some of the bubbles before they become too big to be able to do so without taking the whole financial system with it. Which is something that you won't see happening in countries like the US. Unfortunately, the way the US, for example, is currently working and the way the Fed is working in tandem with the government, and when I say the government, I don't mean this government, I mean any government, right? It doesn't have to do with a Republican government or a Democrat government, is that in essence, they keep inflating the bubble until it bursts on its own because something happens. But nobody wants to take the responsibility of deflating the bubble before it becomes, too big to fail. And at some point, we're going to have another financial crisis, and everybody's going to be wondering, like, oh my God, how can we have, so frequent financial crises? I mean, during the last, 30, 40 years. And of course, the answer is obvious, because, we have an environment that is, perfect in creating bubbles, and bubbles create, this type of phenomena. In any case, as long as there are no jitters that the financial system is in danger of failing, a risk-off is going to be considered bad for monetary metals, especially silver, obviously, because it's more risk sensitive than gold is. Of course, one of the most sensitive metals having to do with risk-off, which you can see its reaction today, is copper. Copper actually started selling off first. This is the third consecutive down day for copper. In my opinion, still within a corrective pattern. So yes, we've got rejected once again from this formation. It's not exactly a channel, if you notice. But I do think that this is a larger corrective formation. So I think that eventually we're going to continue higher, but as long as the situation is what it is, copper might continue suffering somewhat. Now, another metal that has been suffering today because it keeps, underperforming is platinum. We had anyhow said how platinum looks the weakest among the gold, silver, and among the three of them, it was the weakest. And as we said, next downside target is 80, 850, 860, somewhere there. So, it's on its way. Now, palladium also very, very heavy. I think there is more downside here as well. You get lucky and you get any rebound towards 2200. I think that's a decent sell. Now, it's also not a surprise, the fact that crude oil is lower today. It was quite a lot lower, but it has already pared back most of its losses. Let's see how it's going to close the day. Now, it's not a surprise. You all know that crude oil also has a rather decent correlation with risk assets. So far, we've just backtested this breakout area, and it's held. So for the time being, there is no bearish technical development to talk about. But if risk-off continues, it is worth paying attention to crude oil, and if despite that it's going to manage to hold above this like 69.5 support area. So keep that in mind. It's something I'm going to be paying close attention. Now, if it manages, if we get a continuation of risk off for a few days, and despite that crude oil manages to hold above this, in my opinion, that's going to be a super bullish sign, because once we go back to the usual bullish conditions having to do with risk assets, I think that crude is going to fly again, and it's going to punch through $80 rather easily. Now, also, as you understand, it was impossible for the USD yen to break higher with risk of conditions. So another rejection for the USD yen from this channel trendline resistance, and in combination with the fact that the rest of the pairs, especially commodity currencies, are pushing lower against the dollar because we have the usual risk of flows to the dollar, it is not surprising that yen pairs are doing really badly. We're going to have a look at them, but first let me, since we were at the USD yen, let's have a fast look at the 10-year yields, which you're not going to be surprised to find out that they're lower. Of course, nothing substantial, as you say, but definitely not higher with risk off. Now, having to do with yen pairs, here's the Aussie yen, quite a nice move lower. Look where we got rejected. It's this confluence of resistances, the 50% fib and the 200 daily moving average. We're now back testing the broken channel trendline resistance as support. So, pay attention to this level. If Aussie yen holds here, all is well and good. I mean, we might just continue higher from there. But if we break down from here as well, then the whole thesis that we've already found a low and we're pushing higher is being put in doubt. More or less same deal here with the Kiwi yen. Let me extend this. What's the previous channel trend line resistance as support? We break through it. That's not going to be good. We stay above it. The bullish case scenario is still alive. Look how this confluence of the 50 and 200 daily moving average are holding for the time being. They've merged exactly, where we are. What else was it that I wanted to talk about? Yeah, I think Blake covered everything else. So, yeah, having to do with USD NOK, I know that Blake talked about it, but since I have a position there, let me give you my 50 cents as well. As long as on a daily basis, we're not closing above this confluence of resistances, roughly at 872, 875, I find absolutely no reason why I should change anything in my position. So that's that. So, I'm only willing to start thinking about what I want to do with it. I'm still in the money. Still willing to start thinking what I want to do with it only if we close above that. But for the time being, it's behaving decently given, the risk of conditions. So, nothing to add, not unless I see a daily close that tells me differently. What else? Yeah, the DAX. Yeah, one more thing. The DAX is also displaying a beautiful breakdown, right, from this wedge. Keep in mind that the equivalent downside targets for the DAX is 14,750. In the case of the DAX, the first support area, and 14,125 is the next one, right? And below 15,550, no reason to be bullish as long as we have this development. Also having to do with the VIX, just a reminder here, we had talked about this triangle some time ago. As you see, we're finally decisively breaking above it, right? Very decisively breaking above it. So the VIX, in essence, is confirming the breakdown that we see in the major indices. So keep that in mind. Anyhow, that's it. Let me go through your questions now.
Actually, Steve, I have one for you first.
Absolutely.
Remember that ETF URA, the uranium one? We had a look.
Of course I do.
People, I know a couple of people have been asking on the chat room in here. That's why I want to mention it. I was long that one. I posted on the chat room. I got out at 27.70 last week, and I've just got long again at 23.80 this morning. I posted it as soon as I did it.
What can I say? We drew that in
We
advance,
drew that
we?
exactly, and you know what?
Yeah.
You kind of guided me for this, because we were looking at it. It was breaking out for sure, and then you were talking about, how it should come back to retest those highs, the breakout highs. And I think that went, textbook. I love it when they go like that. It's not often that they do, but this one did. And
now, be very careful though, right?
Yes,
because
yes.
There is an alternative way that we can take to go lower, which is something like this. I'm not surprised that for the time being we're finding support here. I would consider that almost a given that we would at least temporarily find support here, and rebuying it here makes 100% sense from a risk reward perspective. But if you see the rebound having corrective characteristics and being very weak, and then you see it roll over again, just exit your position and you'll get the opportunity to buy it lower. We might then be looking for a deeper corrective move, which it's part of the game. I mean, we've had massive moves higher in this URA trade, and at some point, it's going to produce some deeper corrective move as well. But I think making an attempt to buy it here as we speak is definitely a move that makes sense. Okay, Stel. Did we lose?
Sorry, I was speaking and I was muted. I was just going to say that the way I'm playing it this time, because on my last long I made something like 30%, which was really good. Now I'm putting my stop at something like -5%. I think 22.60 probably I'm going to put the stop. If it goes below there, then I'm just going to let it run and see. So I am lucky enough to have some leeway to play with, but yeah. I think it's worth taking along here, and if it breaks down, obviously I've got my stop in, and we move on. Thank you for looking at that, Steve. You did help me with this quite a lot.
My pleasure. That's why we're here. Somebody wants to know about Vale. Oh, in the Bovespa, it's a Brazilian stock. Yeah. You want the bad news or the bad news first? This doesn't look healthy. This definitely doesn't look healthy. Although I have to admit it has already run a decent amount. But the move it has been moving low, the way it has been moving lower is very impulsive in nature. And I don't like the fact that we are about to retrace below this area. This is a very important area that we're testing as we speak, right? Why? Because we've now fully retraced the wedge. So yeah, ancient Greeks would say here Itani epitas, which is like, in essence, this is like the, the ultimate zone, right?
The make or break level, basically.
The make or break level, yes, yes. We see it continuing in this impulsive manner below this area, and I think there is more to go. Just look at the this RSI reading at 16. First of all, look at the amazing RSI divergence. I mean, we had this huge signal because, this is like a very strong RSI divergence we had there. And now we have this impulsive move lower, RSI hitting 16. This shows weakness. This shows a lot of weakness. So would I be buying it here? You can make an attempt because this is a key area, right? But you see it break through, this area, you give it a little bit of leeway, let's say below 80. You don't want to be there. And keep in mind that if you want to do this, you're trying to catch a falling knife. So keep that in mind. The thing is that the dividend announced is huge, and they got mixed feelings about that stock. The iron profit that the company had was huge due to price action, and the dividends announced was 8.1 real for share. Yes, but it doesn't matter. Why it doesn't matter? Because unless you are the only one that knows about this dividend, which of course it isn't the case, then that dividend is already priced in.
Yes, exactly.
And despite that, the stock is tanking like it's nobody's business. You know what I mean? So I do understand where you're coming from, and I do understand that it might be a great opportunity due to the dividend, etc. But if this chart is telling me that we're about to rebound higher, the only thing that you have going for you is that we are at a nice, interesting area of support. But the price action so far has been unfolding in a very, very impulsive manner. Now let's have a look at, let's fib this whole massive. Yeah, we're even breaking through the 38.2. So be very careful if you want to buy it. Be very, very careful, because you might end up being from a trader an investor here. You understand what I mean? Okay, good. Now, given what the company does, because I do know Vale, I would be bullish long term, right? So my thesis having to do with the company, I would be bullish long term. But given the massive move higher and the weights pushing lower as we speak, I don't think it's the time yet to be buying it again. There you go. Okay, we might see a deeper retracement before that happens. Can you have a look at AMC? Absolutely. AMC. Okay, last time
that's a meme stock, right?
Yeah, absolutely. Last time we had a look at it, we were there, right? And we were talking about how it can potentially unfold, etc. Now that we have a lot more price action, check. Let's start redrawing things. Let's first of all see the importance of this trend line. First of all, does this have a parallel or it doesn't? I'm not yet convinced that this thing is continuing higher. I have to tell you in advance. I'm not at all convinced. Now let's take the parallel of this line and see if it channels. Yeah, not exactly. In any case, my basic, my basic observation on this chart is that we've had this parabolic move higher. Fundamentally speaking, a complete BS. There's no fundamental thesis behind it. I can tell you that much. I had a look at the fundamentals of AMC, etc. This, there's no way they're going to ever, deserve this kind of valuation. It just became a meme stock and all the rest. So fundamentally speaking, it would be extremely bearish, but purely technically speaking, I'm not convinced we're not just yet consolidating this bigger move in some kind of a larger formation, right? We've had this leg higher, which isn't very impulsive. Notice how the RSI never broke to overbought territory again, right? So keep that in mind as well. So I would more or less be neutral here, technically speaking, because fundamentally speaking, as I said, I would be very, very bearish. I think that at some point, given some time, this thing is going much, much lower. But of course, it's a meme stock, so, take that with a grain of salt. Now, somebody's asking about the GDX, and I'll be more than happy to have a look at it for you. And you'll notice that the GDX is still grinding lower. Right. And I still think that the GDX grinding lower is an amazing opportunity, because the GDX is already underpriced in comparison to gold's price where it currently is. So the market, in essence, is pricing in the GDX that gold is going much lower, in a sense, right? And I think in essence, the GDX is discounted, right? Either gold is very expensive here or the GDX is cheap. And needless to say, that my personal belief is that the GDX is too cheap. Actually, I think both of them are cheap, but GDX cheaper due to that. Hit a low last week and held 30. Yeah, this 30, 31 area is an important area. It is. Not that I would be surprised if they send again longs to the woodshed as they've done before, as they did, in the COVID sell-off before it rallied. So keep that in mind. Now, Amir, I want to have a look at the DXY, and something we can first have a look at the DXY. This is what we drew last week having to do with the DXY. I said that this might be one leg high, this might be a triangle, and that might imply that we have another leg higher that would target this level, 93.40. We did actually hit 93.40. So now we've completed the minimum expectations for this move higher. Now, since we broke through the triangle, that is. Now, of course, this move higher might have unfolded in a more impulsive manner, which might take us even to new highs for the time being. I still think that the larger move higher in the DXY is going to prove to be corrective, but we might be still unfolding a more complex move to the upside. Right now, to make a long story short, as long as we trade above 92.80, you can be bullish, with 93.73 being the next upside target. So I think that simplifies things. Now, having to do with a question that about natural gas, I'll have to tell you that nothing has really changed with natural gas. Natural gas did pull back as we expected that at some point it would. It's toying around with the idea of breaking down through this channel, which would inevitably happen because the channel was almost vertical, right? So, inevitably at some point, natural gas would have to break through the channel and produce some kind of a corrective move lower. Nothing can move vertically forever. Not even cryptocurrencies, not even stocks. Now, as long as we trade above 420, there is absolutely no reason to be a bearish natural gas. Even if we see this move unfolding lower, I think it's going to be a healthy corrective move that's going to give you the ability to buy natural gas at better prices. I think that nothing has changed technically having to do with the market. I think it's still a healthy, strong market, and sooner rather than later, it should continue the upside. Now, of course, you shouldn't be buying it here. You shouldn't have bought it 2 days ago, as I've been saying again and again. But that doesn't mean that the bullish nature of this market has really changed. I think it absolutely has not. Okay. I think I covered the things we had to talk about. I'm happy that I was not overly optimistic when I said on Friday, let's hope that today we're going to get, a break lower in the S&P that's going to make our next week more interesting. We did get that. Now let's hope that this week is indeed going to continue being interesting. I think we have a decent chance for that to happen. So keep that in mind. Given how we start the week, I'm rather optimistic. So yeah, I think we're going to have a lot to talk about day in, day out, webinar in, webinar out during the week. So have a wonderful rest of the day and talk to you again tomorrow.